Okay, then.
Okay, so
Yeah.
you're gonna enlarge that whole thing. Okay, great. Okay, well, good morning and welcome to the Kushner Report for October 2025. We're just concluding the third quarter of the year as we move into the last 3 months of 2025. It's hard to believe the year has gone by it just very quickly. And so today, what we're going to do is cover a lot of territory. There's a lot of things that took place over the last 90 days. So welcome to the Kushner Report for October. And when we conclude the presentation this morning, we're going to go into Q&A, and you'll have an opportunity to participate in the program. So today's agenda, we're going to take a look at key economic indicators, the global economy, the domestic economy, mergers and acquisitions, other significant economic news, and today, what's ahead for artificial intelligence and also venture capital. So first of all, in 2025, the outlook signals are really an era of unprecedented advancements across multiple sectors, where artificial intelligence will increasingly drive innovation, efficiency, and transformation. AI is really playing a major role now in the advancement of precision medicine by analyzing patient data to develop highly personalized treatment plans. And we're looking at AI algorithms are accelerating drug discovery by predicting which compounds are most likely to work for specific diseases. AI-driven robotic systems will also assist even in performing surgeries with enhanced precision, reducing the risk of human error and improving recovery times. An example is I have a colleague who's in line for a pacemaker, and once he's got the pacemaker, he'll be in line to have his heart replaced. And the two medical foundations here in San Diego are working with, and they're going to use artificial intelligence to replace his heart when the time comes. So it's just amazing what's taking place with AI. AI-powered automation tools will continue to evolve, streamlining operations in various industries, including manufacturing, logistics, and customer service. In finance, AI will refine algorithmic trading, enhance fraud detection, and optimize risk management strategies going forward. AI, for example, in the area of marketing, AI tools will continue to transform marketing by enabling hyper-targeted real-time content delivery and customized segmentation and dynamic pricing models going forward. We're also seeing a broader rollout of autonomous vehicles, including self-driving cars, trucks, and drones. And AI-powered navigation systems will improve safety, efficiency, and traffic management. Robotics powered by AI are really revolutionizing industries such as manufacturing, warehousing, and logistics. AI-driven robotics will handle more complex tasks such as quality control, packaging, and assembly with minimal human intervention. AI continues to expand the capabilities of drones in areas like delivery services, infrastructure inspection, environmental monitoring, and also in the area of agriculture. When we look at creation, we look at AI capabilities in the creative fields such as music composition, visual generation, writing, and also video production are continuing to expand significantly across the environment. The line between human and AI generated content becomes even better at producing realistic video, voice synthesis, and of course, deepfake technology. AI powered systems are also being used to monitor the networks and systems for signs of potential cyber threats, which is really a big concern for the United States and other countries around the world. AI will continue to automate many of the aspects of cybersecurity, including cyber identifying vulnerabilities, patch management, and also responding to incidents. The AI systems also become more integral decision-making tools, such as in the hiring, lending, and law enforcement. The industry will focus on improving lending, fairness, reducing bias, and also ensuring that AI systems become not only transparent, but also explainable. Governments and international organizations will introduce more robust frameworks and regulations to govern the use of AI, focusing on ensuring privacy, safety, and transparency, which are major concerns throughout the world. And also in the area of research into safety and intensity, especially in areas like automation and autonomous systems, and also superintelligent AI. So when you look at education, AI will continue to transform our educational system by providing personalized learning experiences. for students. And AI will shift the workforce, automating routine and manual tasks while creating new roles that require skills in AI, robotics, data centers, scientific technology, and also data transformation. So you'll see a whole new area for people for jobs in terms of training and so forth. So a lot of the older type of positions will go away, and you'll see people moving into a new generation of new jobs and higher paying jobs as well. The AI will be leveraged really to help combat the change by optimizing energy usage, enhancing environmental monitoring, and enabling sustainable agricultural practices across the globe. And AI will enable better management resource in a circular economy model, including efficient waste sorting, recycling, and repurposing of materials. And of course, AI is expected to be a key driver of global economic update, and therefore the growth will continue, and the technology will enable significant productivity gains, particularly in industries like manufacturing, healthcare, transportation, and agriculture. The demand for AI talent continues to outpace supply. Keep that in mind, creating competition for skilled workers in AI and machine learning. So, in conclusion, we've seen in 2025 that AI will deeply be embedded in both everyday life and business landscape, and it will continue to revolutionize the sectors as we continue to go along. And we'll see more and more as we move forward. A lot of concerns, but a lot of deep things going on, especially in the area of biotechnology. Now let's take a look at venture capital. So in 2025, the U.S. venture capital market continues to navigate a mixture of cautious optimism and strategic recalibration following the turbulence of previous years. So here's some of the trends that are now taking place and continuing throughout the year and getting ready to move into 2026. In 2025, the market continues to stabilize with valuations being more in line with fundamentals. And we're seeing investors are increasingly cautious, focusing on sustainability, profitability, and long-term growth rather than just high-performing, what we call unicorns and the growth at all costs. So the days of the dot-com era are gone. And many startups are shifting focus on scaling rapidly to achieving profitability to becoming cash flow positive. And when we look at the area of the companies, the VCs are really pushing for more due diligence on financials, really aiming back to companies that can weather economic downturns or market slowdowns. Now, there has been an uptick in the early stage investments as investors are becoming more risk adverse and willing to take on more challenges and smaller bets in the early stage processes. Now, early stage funding is increasingly directed toward niche markets, such as growing companies in the emphasis such as biotech, AI, clean energy, and fintech. So those are the four areas where you're seeing a lot of opportunities taking place. Continued enthusiasm around generative AI and machine learning and automated tools continues throughout the industry, and investors remain committed to supporting startups in renewable energy, carbon capture, and environmental tech spaces. Keep in mind the healthcare innovation, particularly in areas of personalized medicine, as I mentioned earlier, areas in biotech and digital health continue to see strong VC investments. And VCs are continually increasingly in what we call environmental social governance factors when making investment decisions. And the trends both in a shift in investor priorities and consumer demand for responsible, sustainable companies. Keep in mind, cash flow, profitability, and growth are really the key underlying premises in this marketplace. Now, corporate venture arms have been actively participating in the market, especially in the technology sectors. Companies like Intel, Microsoft, and Google continue to make major investments around the board. It was indicated yesterday that Microsoft is spending something over $70 billion this year alone on improving AI within their own portfolio. And of course, the CVCs are really generally focused on strategic partnerships rather than just purely returns. When we take a look at the global markets, while the US VC market remains dominant, there is increasing global competition, especially from China, India, and Europe. On the flip side, geographical tensions regulations, changes, etc., like in tech bans and trade restrictions, etc., and concerns over global supply chains are still affecting really cross-border investments across the country and across the world. So the high interest rates have really made a debt financing more expensive, which has really shifted the focus back to equity investments in many cases. And inflation and economic uncertainty continue to put pressure on startups, forcing many to focus on cutting costs and operational efficiency. And many companies, such as a few in San Diego, are running out of funding, and we'll see what takes place at the end of the year, whether they continue the funding process or whether they're just basically going to shut down the operations. Many VC firms are raising smaller funds or pausing fundraising to adjust to the evolving market conditions. And we're seeing corporate investors, such as sovereign wealth funds and family offices, are becoming more active in the VC marketplace, especially for latter stage companies where they're looking for continued funding rounds. Now, when we look at the term called exit, the IPO market remains somewhat quiet, with few startups opting to go public in the near term. And what we're seeing is mergers and acquisitions remain the primary exit strategy, with large firms acquiring the smaller startups that offer strategic value or a competitive advantage. When we look at some of the challenges taking place, tariffs, policy uncertainty, and cautious sentiment continue to temper investment zeal outside the mega deals that are taking place throughout the country. Shutdowns rose substantially in 2024, and many underfunded or overvalued firms are still struggling in 2025. So, in conclusion, while the U.S. venture capital market in 2025 is somewhat quieter than it has been in the past, the heady years of the 2010s and the 2020s are still in the past, but it's actively investing, albeit more cautious, with strategic approaches in the future. The market is adjusting, if you will, to more sustainable pace with greater emphasis on long-term growth and short-term gains. So that kind of takes us through what's taking place now in the area of venture capital and artificial intelligence. Excuse me. So let's take a look now at our key economic indicators. So we're going to look at the gross domestic product, inflation, unemployment at the federal and California level, and also the price per barrel of oil. Keep in mind that some of the data is strictly focused on August because some of the data is not available because of the government shutdown. And I'll mention that as we go through the presentation. So now let's take a look at the key economic indicators. So if we look at the global GDP, since our last presentation, it's up. The projection is going out the end of the year around 3% and then dropping down next year to 2.7%. US seems to getting a little bit stronger in the fourth quarter, moving up to 2% and then increasing to 3% sometime next year. Inflation still remains around 3% both this year and also next year. The unemployment rates remain across the country still around 4.3% this year and next year. California's sustainability is still being a problem at 5.4% and could go higher. And then they're expecting it to drop down to maybe 3.9 next year. The price of oil per barrel, the vacillation continues. It's amazing how low the price per barrel is. I'll mention that later. It closed out around $60 and change yesterday. Looking at the global economy, all four places, the Bank of Canada, the European Central Bank, Reserve Bank of Australia, and also the Bank of England, all have cut rates by 25 basis points and are all planning to do so between now and the end of the year. So you're seeing a change now economically, where it's becoming even better and stronger for their economies across the board. Looking at our domestic economy, again, a major concern is U.S. credit card debt. It's now increased to $1.21 trillion, which is substantial. It's one of the highest ever recorded. Big concern right now. We're just under 7% of the balances are translating into delinquencies over last year, which is not good. In the agriculture market, the farmers are on solid ground. The good news is that they're riding the tailwinds of sturdy economic growth, moderating production costs, and have strong receipts of livestock are booming in the nation's ranchers, so who are highly transparent and required and focusing on cash flow. So this is good for their particular environment. Bankruptcies are now the highest level since the end of COVID, and that's continuing throughout the country. And as you know, the Federal Open Market Committee a couple of months ago dropped interest rates by a quarter of a point, and late yesterday they dropped it another 25 basis points. So we're down at 3.75 to 4% range. So we're now seeing the interest rates coming down. Now let's take a look at inflation. I mentioned earlier, inflation kind of rose to 3.3% last month, and which is a concern. And going forward again, we don't seem to be close to breaking the down frame to in the twos. In the wholesale marketplace, we had good news. The rates dropped down to like 0.13% as we saw cheaper food prices, a substantial decline in fuel, and also manufactured goods. So this is all good going forward. In the area of retail sales, the data is not available for the month of September. However, in retail sales for the month of August, we saw an increase of 0.5 of a point. So it's still a lot of strong buying, both on credit cards and cash. Now, taking a look at the employment picture on the national side for August, since the September date is not available, we had a meager 22,000 jobs, and the employment rate increased to 4.3%. That's the highest since 2017. Look at the different vertical markets. All of them had negative growth, except for health and education and also leisure and hospitality. So the market continues to be downgrading in the area of employment positions throughout the country. When we look at the California report, we had just a meager 3,800 jobs created in August. The unemployment rate remained at 5.5%. You can look at the key sectors in California. The only ones that saw some significant growth were health and education, and again, leisure and hospitality. The other areas all had negative growth. Now, when we take a look at mortgage rates, the good news is they dropped down again. The latest about a week ago, and the average across the board was at 6.26%. And we think that it'll stay somewhere around 6% throughout the rest of the year. Hopefully, with the continued drop in rates, it could drop down to the high fives, but we'll wait and see. At this point, it's still around 6%. The manufacturing index improved to 49.1 in September over the 48.7 that we saw in August. We're still below the 50 basis points, which says the industry is still contracting. When we look at small business optimism, we're seeing that the confidence level rose slightly to 88.1. We're still below the 100 basis points that we see as a healthy sector from earlier in the year. So we have a long ways to go to improve in that sector. In terms of consumer confidence, we saw that the boarding declined by 3.6% to 94.2, again below the 100 level. I mentioned crude oil prices. I checked this morning. They closed yesterday at $60.16. That's down from almost $6 since the end of September, early September. So the marketplace continues to stay low in that. Prices across the country on our trip, we saw two places where it was over $3 a gallon for both premium and also for regular. So it's going down across the board around the country, not in California. Taking a look at housing starts, they decreased by 8.5% in September, and that continues on because of the concerns about the marketplace and affordability. In the area of new home sales, the good news is across the country, they rose at 4.1%. So let's take a look at Southern California. In Los Angeles County, they had a good month. The price of 983,000 plus increased by 5.6% in September, and sales were up by almost 21% during the month over August. And also, we saw that sales were up by almost 14% over 2024 in the month of September. So that was a good month for the county of Los Angeles. Look in Orange County, the median price for those products on the market was at 1,401,000 plus, increase of 1.2%. Sales were up by 2, and then we saw that the sales were up by 1.8% in September over last year. San Diego was the worst of the three sectors. We saw that the sales price dropped to 990,000. That's down about 3.4% from the prior month, and sales decreased by 2% during the month, but they were up about 14% over 2024 at the same time frame. We look at existing home sales. We had a 7-month high. We saw increased sales of 1.5% in September. So it was a very good, strong month for that. Productivity, which is a real critical aspect of our economy. Good news here. Second quarter labor productivity was up by 2.4%, and output increased by 3.7%. You're starting to see more people going back to their offices more than just 3 days a week. They're going to be going back full time. And many companies have told employees that by January 1st, you'll be in the office full time or we'll accept your resignation. Company displacements is really one of the critical points here as it relates to the employment factor. And we had substantial amount of companies had a lot of displacements during the month. I'll just go over some of the ones that were significant. So Teva Pharmaceuticals lost 2,900 jobs. Intel lost 24,000. Merck 6,000. We have a company called Glassdoor for those in the recruiting area, 1,300. Bayer 12,000. Hewlett Packard another 7,000. Estee Lauder 3,200. Paramount in the motion picture industry just under 3,000. We saw Intel another 2,400 a couple of weeks ago. Nissan Motors on a global basis 20,000. ConocoPhillips just under 3,000. Microsoft another 15,000. Spirit Airlines, as you know, came out of bankruptcy. They've laid off 1,800 and they're closing about 12 cities around the country to try to continue to be flying out of bankruptcy. And then Price Waterhouse, 1,500. Accenture, which is a major consulting firm, 11,000. Nestle's is restructuring and they just terminated 15,000. And then Target Corporate, 1,800. And then yesterday, Amazon announced 14,000. So if we take a look at the M&A space, it's been extremely active this year and especially last quarter. You're seeing a lot of consolidations taking place, especially in areas where you're having somewhat of poor organic growth. So one way to increase your business is to buy other companies or divest businesses that no longer fit the portfolio. So I'm just going to go through a quick snapshot of these. So the Packaging Corporation is buying Grief Container for $1 billion, and Abbey is acquiring Captain for $2.1 billion. And this is a company involved in therapeutics. We see that Stone Ridge Holdings is acquiring ConocoPhillips assets for $1.3 billion. And then Western Midstream is buying Water Solutions. This is a fully integrated water solutions product group with value chains for $1.5 billion. And then we have Master Brands is merging with American Woodwork for $1.5 billion. It's a portfolio which streamlining the cost of making and manufacturing profiles across the board. So there's a good strategic investment from that perspective. And then Amphenol is buying connectivity solutions. And what this is a fiber optic interconnect capabilities for IT and communications networks. So you're seeing that taking place. Lowe's, over the last few years of struggling, has become much stronger. They're buying a company called Home Business. What this is, it's an $8.8 billion job. And the purpose of this is that they want an effort is to attract more business from home professionals. So the building materials company represents a distributor of drywall, insulation, and other interior building products. And again, they're competing with Home Depot. So you see Dr. Pepper is buying Peet's Coffee for $18 billion. And once the deal is consummated, they're going to break the company into two. One will focus on coffee, the other will focus on beverages. Now, there's a company called OpenAI. We talked about them. They're buying Stat Sigma, which is less than a year old. It's a early stage startup company in Seattle for $1.1 billion. Then we have plans, Allpipe is buying Epic Crude stake for $1.6 billion. This is taking place throughout Texas, the state of Texas. And then PEI firm Madison Dearborn is buying Abons Welshire, which is a wealth management group. Here it's and they're taking the company private. This is a $2.7 billion deal. And then Cadence, which is a Bay Area company, is buying Hexagon Design and Engineering firm for just under $3.16 billion. Novartis is active again in the biotech space. They're buying Tourmaline Bio, and this deal is going to take place for $1.4 billion. The idea here is aimed at reducing systematic inflation, which is teamed with a major driver of cardiovascular diseases. Then Barnes and Nobles, which is one of the remaining major bookstores around the country, has decided to buy a company called Books Incorporated. The company has been around for 174 years. They're in bankruptcy. The deal is approximately $3.25 billion. So that'll be a boon for Barnes and Noble, and they'll keep the company will continue to operate as Books Incorporated. Then CVC is acquiring GoDaddy. Their rival is Namecheap for $1.5 billion. This is one of the largest independent domain registrars and hosting providers in the country. Then TPG will acquire GE Vernova Prophecy Software for $600 million. And then Electronic Arts, which is a major game company in the Bay Area, has confirmed they're being acquired by a private group of investors for $55 billion, and they will take the company private. The investors include Saudi Arabia's PIF, Silver Lake Partners, and Affinity Partners led by Jared Kushner. The idea is that they will keep the company headquartered in Redwood City, California, and the current CEO will continue to manage the portfolio. Then we have a consolidation taking place in the banking industry, and this is Fifth Third is merging with Co-America. It's worth $10.9 billion. It'll become the ninth largest banking system in the United States. Then we have Excel Technology, and Vica is combining there for $4.4 billion. Basically, they're a leading semiconductor equipment company serving multinational companies across the globe. Then Berkshire Hathaway, which is common to everybody else, is acquiring OxyChem. That's part of the Occidental Petroleum Group. Excuse me, for $9.7 billion. And then Quadratics is acquiring Press Kennedy for Forsta for $6.75 billion. And this is the most comprehensive IA-driven experience management platform across customer, patient, and employee and market research domains. Now let's take a look at some of the other significant events that are taking place. For those of you in the Bay Area that use Comcast, Comcast has announced they're planning to transition all Comcast Net email accounts from its Xfinity platform to Yahoo, and that's taking place between now and the end of the year. Then global M&A basically has hit a $2.6 trillion peak to boost, and this is boosted by AI, so it's becoming more competitive with the United States. For those of you who have tasted and liked, enjoyed Beyond Meat, they're headed into bankruptcy. The company a few years ago was really wielding a lot, and now they're in bankruptcy, which is unfortunate. GE Appliances has announced they're going to invest $3.1 billion over the next 5 years to expand its U.S. operations, aligning with the administration's efforts to bring manufacturing back to the United States. Playboy Enterprises, which has been around for 200 years, has announced that they're abandoning California and they're moving to Miami. So they've left Los Angeles area and they've moved to Miami. And Amazon is tripling what they call their rural logistics network by hiring 100,000 new people to basically support faster delivery to millions of those customers in less densely related populous regions across the country. And those of you who are familiar with CVS, CVS has to pay a $290 million fine for a whistleblower lawsuit for overcharging for billing for the past 2 years. South Korean shipbuilder is investing $5 billion in the Philadelphia shipyard, and the intent there is to basically bolster our country's ongoing investments in U.S. shipbuilding. We're behind in the Navy and also in the area of the Coast Guard with cutters that are used in ice breaking, etc., especially in the area of Alaska, etc., and we're falling further behind, and this is going to help increase the availability of ships within the United States. Kraft Heinz, as you know, is going to split into two companies. They consolidated a few years ago on a $46 billion blockbuster deal. They're going to break the company up again. And then Spirit Airlines, as I mentioned earlier, they came out of bankruptcy, and in order for them to survive, they're pulling out of 12 cities around the country, and they've laid off 1,800 employees. Publishers Clearinghouses, which has been around since all of us were born, and what we're seeing here is they filed bankruptcy. And what's interesting, the company will not honor payouts for those who won their life-changing prizes before July the 15th of this year. So those funds are gone. And then we have Petco, which is a major pet store chain in the country, who has 1,500 stores. They're going to start by closing 25 underperforming stores, and they'll continue to look at that as they continue to struggle for profitability. Cracker Barrel, for those of you who are familiar with, they're closing 14 restaurants around the country, and that's going to begin in January of 2026. Then auto supplier First Brands has filed bankruptcy. First Brands the lenders are looking into possible irregularities stemming from the company's billion of dollars of off-sheet um, balance sheet debt. So that kind of gives you a thumbnail sketch as to what's taking place over the last 90 days in the economy. So what I'd like to do is I want to open up for Q&A.